Alright guys, what's going on? I want to do a trade recap of today's trade that I took. We caught 294 ticks in the longs. I know a ton of traders on my Instagram, on my free Discord were asking, why did you not short the opening range breakout? Because there is much more to the narrative of this trade. We have to look at our higher time frame bias. So right now I kind of want to just show you why I took the trade I did, why I took the exits I did, why I took the entry, where I kept my stop loss, and all that good stuff. So stick around and we're going to break it down. Alright guys, so let's break down the trade that I took. The very first thing I always do is chart out the 15-minute opening range high and low. So that's going to be our opening candle at 9:30 a.m. Eastern time or New York time. So right here was our opening range high and low. So I charted out this level at the high, right? We want to chart the wick to wick of that candle. And then I charted out the low down here, right? So many people like on my Instagram and on the free Discord were asking, why did you not short? We got a close below on the 15-minute. I took a short and lost because what most people didn't realize is there is a narrative behind every trade, guys. If you are just simply taking an opening range breakout trade because we broke out of the opening range, you're more than likely going to lose most of your trades. So you have to understand the full picture of what's going on. So that's why I went to the daily time frame, right? And what I noticed is that we traded into a daily bullish fair value gap right here. Which had been a very strong fair value gap before. If we look at that daily candle that originally traded into it, look how aggressive this candle came out of that daily fair value gap. Huge expansion from that level, so we know it's already a very strong level. The other thing I noticed is that we came down and we swept a 4-hour swing low. So this was external liquidity going into a higher time frame fair value gap. So my whole kind of idea for the trade is external to internal liquidity, right? So we swept external. And the other reason I didn't expect this to drop further is because we didn't have external liquidity until all the way down here at like 19,100. So I'm not expecting a 600-point drop pre-FOMC, right? I'm expecting more range-bound price action pre-FOMC. I'm not looking for a huge expansion. So with all that being said, that's my narrative now behind the trade. I'm not looking for shorts to break out. I'm looking for longs. I'm looking for more of a range-bound trade. So that's when I go down to the 1-minute time frame. And I look for the manipulation, right? So many people got trapped by trying to short this 1-minute fair value gap. And this is where everybody went wrong because this is not where you want to get in. You're not wanting to short into a daily fair value gap, right? Unless you wanted to maybe scalp this just down to that external liquidity for 100 ticks. That's the only thing that makes sense. But so many traders got stopped out of that move because that's not the narrative in the fuller picture of the trade. What I wait for is a fake out of the opening range and for us to come down and sweep that external low and give us a reversal, right? And the other thing that we want to add to this is our SMT divergence. If we look at the 4-hour on ES over here, the first thing that I noticed was that ES failed to sweep that 4-hour low and failed to trade into that daily fair value gap. So now we had higher time frame SMT. And then if we look at the 1-minute time frame, we even had lower time frame SMT right here on the 1-minute. Notice how ES failed to sweep that low on the 1-minute time frame. And then NQ came down right here and swept that low. So that is our fake out move, right? So that's why I didn't take any trades until we manipulated down here and swept that low. So now we have the SMT. We have the liquidity sweep or the soup, whatever you want to call it here, right? We can label this a soup, sweeping internal liquidity. And at this point, excuse me, guys. At this point, I'm now looking for the reversal. So I'm looking for the very first 1-minute bearish fair value gap using the Gooey model. So this is where I combine the 15-minute orb false breakout with the Gooey model to catch my trade. So I was looking for this very first 1-minute bearish fair value gap to target my entry off of. But since we closed so high above that level, I could not snag that entry, right? We were all the way up here. So I was just waiting for the next IFEG. So that's when I waited for this 1-minute IFEG right here. And also a bullish unicorn model on the 1-minute. Notice how we got a low, a high, a lower low, and a displacement of the highs. And then we got a fair value gap overlapping the up close candle. So now we have the Gooey model, the orb false breakout, and we have a 1-minute unicorn model. So this is where I went to look for my entry, right? So I got my entry off of here, and I can just pull up my executions real quick for you, just so you can see exactly where I got my trade. So I believe my trade entry, it was higher than I wanted it to be, but it was still good. So 79175 was actually my entry, which I got filled kind of high on it, but oh well. And then I kept my stop below the wick of that IFEG, so about right here. So yeah, around like 130 to 140 ticks stop once I added back in, because I took my original trade in 10 micros and then I added in once we got a good bounce into 20 micros. And then that's when I used my Fibonacci retracement tool to the 50% of our orb, right? So I charted from the high to the low here. And I'm looking at that 50% as a level to move my stop to break even, basically. So once we hit that 50%, I made it a risk-free trade. So now I had no risk on the table, and it was either a break even or a winning trade, right? So once we hit 50%, now it's break even. And then we got a lot of stalling up here at the top, and I knew it was a range-bound day, so I wanted to secure profit on this move because we had a 1 minute fair value gap. We saw a quick bounce, so I ended up just taking half of my position out here, and then I held the rest for right here once we hit that orb high, right? So it was just an orb low to orb high trade, and that's the way I use the Gooey model to catch these false breakouts on the 15-minute orb. To catch big moves, right? I didn't even want to hold on to this trade because I wasn't really expecting too much expansion today. We obviously saw a lot of chop after that, and we kept pumping, but I didn't want to be a part of all of this, right? I just wanted to secure my profit just in case price wanted to come back down. So yeah, I secured, just about 294 ticks on this trade for about $2,384. Overall, this is as A+ of a setup as it gets, guys. Like, this is the cleanest setup I could have possibly asked for. Using my entry model, and again, so many traders would have got manipulated today by trying to short this. Remember, you have to know the full picture, realize what the narrative behind the trade you're taking is, and make sure you're going through that pre-market checklist, right? We're delivering from a higher time frame for value gap, we swept liquidity, and then we got inversion, and we have opposing liquidity. Everything lined up perfectly for this trade. So I took this trade, I took my full TP at the highs, and I walked away and called it a day.